All right, we are looking at shares of Rivian moving slightly higher in the after-hours trade after the EV truck maker narrowed its loss expectation looking ahead, and of course the stock moving right now. Let's bring in Ed Ludlow. He's the co-host of Bloomberg Technology and can tell us a little bit more about how Rivian is doing right now. Ed?
Yeah, so they raised guidance modestly for the year by 2,000 units, 52,000 EVs across their two consumer vehicles and the van that they build for Amazon. As you guys know, I reported earlier in the year that Rivian executives had told staff that actually their plan is to build 62,000. Shares are kind of bounced around. You do wonder if this is either sell the news or investors look at that guide and say, come on, raising guidance by 2,000 units. But what's interesting about this print is that they are showing the benefits of scaling up. You know, deliveries were up 60% quarter on quarter, so they've been able to boost the gross profit by around $35,000 per vehicle delivered. They also have just cut back on what they're burning through, right? So they've updated their guidance for an adjusted loss this year, $4.2 billion, down from $4.3 billion US dollars. And revenue as well, beating on the top line. That comes with the scale of delivering more cars, $1.1 billion. But what's interesting, note they disclosed $34 million of regulatory credits as sales in the quarter as well. And that was a really interesting part of Tesla's early story. So I'm going to track that one with Rivian too.
Oh, give us a sense here. I mean, I feel like, there are a lot of people that want to draw comparisons to Tesla in terms of the trajectory of Tesla, the business, not necessarily the car itself. Are there enough similarities there, Ed, that investors can wrap their head around with maybe not necessarily the same craziness that we saw around Tesla stock? Yeah,
not if you judge them on these two metrics. If you put side by side Rivian's first 4 to 6 quarters of deliveries and production against Tesla's first 4 to 6 months, Rivian is outpacing them. But Rivian is burning through hundreds of millions, if not billions more cash than Tesla did to achieve its early scale. And that has definitely been both a criticism and concern for Rivian. The adjusted loss in the quarter was $1.08 per share. The street was looking at something significantly higher than that, I think around $1.37. So they are showing the benefits of cost discipline. They also, as I said, deferred CapEx, some CapEx to 2024, which means that their forecast for CapEx this year is $1.7 billion. It shows cost control, but I think investors also want to see them invest, right? They had this idea of building a plant in Georgia, and we're not really hearing more about that. The deferred CapEx, is that an indication that that's delayed? We'll ask.